started really with the introduction of Bitcoin.
Okay.
And there's a Bitcoin white paper. Earlier there were various white papers by the NSA, which is a sort of sister organization to the CIA. And then Bitcoin was actually pushed by some mainstream organizations such as the Financial Times. Very early on, the Reuters and Bloomberg that put out financial quotes would already include Bitcoin prices. And there would be big articles about Bitcoin when it was totally fringe and tiny, nobody knew about it. But then there was more and more, and then some of the large banks, JP Morgan, started to say that, well, we're going to collaborate with people that work with Bitcoin or other similar electronic, distributed ledger, blockchain-related currencies similar to Bitcoin. And then also central banks said, oh, we have to get in on this. And so Bitcoin has served as a sort of excuse for central banks to be able to say, we also need, there's this market demand for this now. In fact, this is what Lagarde said. That's why.
If you guys have been watching the We Talk Money show, I've been doing a lot of TA and just giving our thoughts on why I thought that we are going to get a new all-time high prior to the halving, which is actually coming up in about a month. So around April 20th is when the halving is going to kick in. And as of today, we're actually still hovering around the all-time high. We actually broke above it for a couple of days, and now we've been pulling back. And a lot of people are asking the question, like, okay, what does this mean? Is the bull market over, or are things just getting started? And I'll just tell you, I think that things are still just getting started. I think we're in what I consider phase 2 of the market cycle, which is something I came up with in 2017 after the 2013 bubble. And as we were starting to see the second cycle play
Anonymous asks, in currency wars too, you mentioned classes of Bitcoin ownership, like different types of tickets in a cruise ship or on an airplane. What class are these ETFs and why? Are they better than self-custody? They're far, far worse than self-custody. And the class of these exchange traded funds, if you thought of them as a ticket on a cruise ship, this would be the VR class. This would be where you buy a ticket on the cruise ship and then you stay at home and you wear a VR headset to be in a virtual cabin that has a fake view of the ocean from a camera on the ship. And you're not actually on the ship. You're not even close to the ship. You're basically paying for the privilege to get a video feed of what the ship is doing. So it's the worst class. It's not even
right, because once your security depends on a centralized authority, then like the centralized authority can easily abuse that power, right? And like in the physical world, of course, that's like sometimes centralized authorities are difficult to avoid because like in the physical world, often attacking is easy and defending is hard, right? But it still causes a lot of problems. But the more that happens in the digital world, like in the digital world, it's the opposite, right? And you can have like things like cryptographic keys where you can make signatures, but breaking those signatures is like impossible for like even the most powerful attacker, right? And so the more things that you can do that like build off of those kinds of building blocks in the digital world, the less like we can rely on and be vulnerable to the failures of centralized authorities.
Will fall into the poor, the homeless poor, and that's not. There's no incentive to stop that because you have a neo-feudal class, people who really are harken back to the days of feudalism, where it's a couple of thousand essentially monarchical folks like who have hundreds of billions of dollars, and everyone else is literally hand to mouth subsistence. It won't be subsistence farming; it'll be subsistence clicking. Right? You'll be on your Provision Apple product clicking on ads to get a protein pill to survive another hour. Essentially, is what we're heading into if the current trend continues, Graham. So if you extrapolate the bond market from 1981, and you put it through the diffuser machine of inflation and add a few Fed chairmen. And then you ricochet back to Hillary Clinton. You end up with a protein pill from Apple while you're having your Tesla take you to the euthanasia clinic.
20+%. Sometimes it can go up to 30%. And so naturally, a 15% drawdown actually means that we've had less volatility, not more, during this current bull market. Now, one of the other questions that comes up is that we have violated some of the past rules. Historically, when people talked about bull markets, they would say to themselves, okay, well, in the drawdown or the bear market, we never went below the previous all-time high price. As you know, in 2022, though, we violated it. We went below 20,000, which was the past cycle's all-time high. And so, does that mean this cycle is different? Well, then, on the way back up, we also violated a second rule, which was that we never get to an all-time high in Bitcoin's price before the halving. We just hit a new all-time high, and the halving is still a couple of weeks away. So now we have violated two of the rules that everyone said never happens. So yes, in one hand, this is different. We don't know what the future holds.
For me, I got into Bitcoin out of desperation. Before I got involved in the Bitcoin community, I was part of a community called the Monetary Reform Community. And that was a bunch of very old people. I was one of the youngest people to be involved in the community. And we would meet up and discuss the problems with banking. It was the reason why I wrote the book, Banks to Protect Your Future Before Governments Go Bust. I was in frustration out of speaking to so many politicians and trying to get through banking reform and some of the reforms we talked about in the book. Yeah. My wife said to me one crazy idea: why don't we just create a bank that is actually built upon sustainable principles? And so we set ourselves on that adventure in 2009. At the time, we were giving lectures all around the world to anyone that would listen around the coming up financial crisis. I left investment banking in 2006 and no one would listen. Once the financial crisis became a thing, more people were willing.
Okay, 20% of the total cryptocurrency market cap is stable coins right now, okay? Dudes are hiding in stable coins. That money will flow back into Bitcoin. So, hey, long-term thinking, dudes. Think of it, 20% is way too high to make up the total market cap of cryptocurrency. It was an irrational panic this last week, 2 weeks, whatever it is. In terms of dollars, it was the worst day ever on Saturday because it went below the previous all-time high of 20K. I've never seen anything like that before. But if you made it through that, you've got a strong hand like no one else before. So consider yourself a veteran at this point because that was totally unprecedented. But hey, we get new things. I never would have predicted that would have happened. It would have been like in the previous cycle.
You're trying to use money that requires banks. You can't trust the banks, right? You certainly can't trust the banks in Africa and South America and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars?
So let me ask you this. When the Bitcoin world was kind of going down a bit, I think Bitcoin peaked at 61,000 or something, and now it's at 23,000, but it went as low as
17, 18,000.
When it did, a lot of other cryptocurrencies went down as well. You bailed out some companies.
Yeah.
What money did you use to do that?
So there were a few different versions of it, and one piece of this was basically FTX balance sheet. Like we keep our corporate cash just in dollars, and so we'd raised a few $1 billion over the course of the last couple of years, and we're a profitable business. Now we'd also done some acquisitions, which partially balances that out, but we had some cash left, and with the BlockFi, deal, for instance, that was on FTX. I think FTX US.
It doesn't need a token. There is no way to stop Bitcoin. Full stop.
This is Paolo Ardoino, the CEO of Tether.
The way I think about it is that of course, Van Eck is an institutional player, and they only look at the market from the institutional point of view, right? For them, the market they think that it seems to think that the market is all about institutions, and crypto is becoming mainstream in the institutional space. The reality, and look, we are extremely glad, as I said before, if our competitors keep growing, and Tether doesn't have to be the first and the biggest stablecoins forever.
How did you come into crypto? How did you come into Bitcoin?
Well, I was we had started the Dollar Vigilante in 2010, and I hadn't heard about Bitcoin at that moment in time. Bitcoin, of course, launched in 2009, and actually a lot of the people who work at the Crypto Vigilante now, they all knew about it, and were talking with Satoshi about it back then. It's an amazing team that you've got and you work with. So I started it, and I started talking about the dollar collapse. I said things should start to really collapse by the end of the decade, so by 2020. And interestingly enough, in February of 2020 is when the whole COVID pandemic came out, and most of the stuff that we were talking about all went into process. They started basically printing money at unbelievable amounts of levels, shutting down businesses. Things look like they're going to collapse, and they are collapsing, and they continue to collapse. But that was really the beginning of the collapse, in my opinion.
And that's, $4 trillion-ish kind of potential money printing exercise. So we know the response. So if we believe that commercial real estate is going to be recognized as a problem, investors are going to flee these stocks for safety, because why would you want to be in a bank that could be bailed out or not could be bailed out? Just might as well just get the fuck out of it and save yourself the hassle. Then we could have a banking crisis, which then will prompt, the Fed to print more money, and then everybody goes and buys Lambos because crypto goes nuts, right? That's kind of the thesis. But we need to have a little crisis first.
Well, that was the next million sats question of how then, for people like you and me, people that are in crypto, how are you expecting that to impact the crypto markets? How is the crypto market going to fare and play out over the next 12 to 18 months? What is your approach?
Well, I think at the end of the day, we know that they're going to print money to save the banking system. We just don't know when it's going to happen, and then what the program is going to look like. They're not going to call it quantitative easing, or not going to call this thing that they called it before, because that's politically not suitable.
CZ, though, it seems like he's on the up and up. CZ Binance, obviously not a part of Binance anymore. He was the former co-founder, CEO. Well, he is still the co-founder. That doesn't disappear. But he was the former CEO of Binance. He got cracked down on when they cracked down on Binance in the US. They blamed him for doing all these things that really there was no proof of him doing. He still has a court case that has yet to go on. And he tweeted something that really broke CryptoX yesterday. And it was this. CZ tweeted, launching a new project. No new tokens. It's educational. More details soon.
A situation like the FTX collapse. Well, first of all, the key is not to get into that situation first. It's not just when a crisis happened, what do you do? When you move tens of billions of user funds and lost it, that's kind of hard to manage. But even when that happens, I think the best things to do is stop everything, be transparent, communicate, be open. But more importantly, the trick is not to even go anywhere near that. So there's a few principles in business that you never violate. Never touch user funds. Keep them secure, keep them separate, and run a healthy business, or run a sustainable business. Don't take shortcuts. I think prevention is much more important than handling it. But don't try to fool anyone again.